Morning, everyone. It's the 19th of April. We are Signal Centre Talking Ball. I'm Joe Neighbour and joined by Steve O'Hare. Good morning, Steve.
Good morning, mate.
Have a nice weekend.
Yes, very nice. Very nice indeed. Darcy's 19th birthday yesterday, so we went
Oh,
out,
wow.
got some fish and chips.
Lovely.
Socially
Where'd you go?
distanced, obviously. Are you allowed to travel nowadays?
Yeah, a little bit. Where did you go? How far did you go?
I don't know.
No
Can't
one knows
say.
where you are, so they can't say how far you've travelled, can they?
No. Yeah, just neighbouring county anyway.
Okay, fine. Um, weather was good though, wasn't it?
Yeah, it was
Always
nice actually. A
helps.
bit windy on the beach, but yeah, nice,
Cool.
nice fish and chips.
Good. Okay, well, let's crack on then. Start of a new week and some headlines over the weekend that may impact markets. So first up, we've got on the political front, we've got the battle to replace Angela Merkel ongoing. Looks like we're going to get Markus Söder, who's going to be in charge to lead the Bavarian allies of Merkel's CDU party. Looks like he's going to force out his rival Armin Laschet, or Laschet, I don't know how you pronounce it. So that's ongoing at the moment. In terms of coronavirus, some pretty sobering numbers due out as well. More people around the world were diagnosed with coronavirus during the past 7 days than any other week since the virus emerged, topping 5.2 million globally. Now, of course, obviously, there's a lot of testing going on now, which would impact those numbers, but that doesn't look very good at all, does it?
No, not really.
The worst outbreaks are gaining speed, and in many countries are ill-equipped to cope. The data showed a 12% increase in the cases from a week earlier, throwing doubts on the hope that the end of the pandemic is in sight. Obviously, just reiterates the fact that we've got to be careful, even though we are relaxing quite a lot of the restrictions in the UK. Pub was absolutely mad on Friday night. I don't know if you've been to a pub yet.
No, I haven't actually. I haven't been to an actual pub. But yeah,
It was
I've driven
heaving
past a few.
at my
Yeah,
local
was it?
pub on Friday. Yeah.
Well, outside, obviously.
Yes, all
Yeah,
outside. Yeah.
yeah.
Um,
I saw there's a pickup in infection rates and deaths over the last week in the UK
yeah,
as
we've got to
well.
be careful, haven't we? Can't be dealing with
Yeah,
another lockdown.
yeah. I think the problem is they're sort of like they're talking about opening up the borders again, aren't they? And sort of like allowing this
All these variants
social
in.
travel. Yeah, and obviously I think in India you're seeing some sort of like quite horrific stats on the spread of the new, a mutated virus there. So the safe countries include the US.
Okay.
Why? I mean, why? Why would you class the US as being safe?
Cash, man.
Yeah, they call me cynical,
Yeah.
but I mean, Israel, yeah, absolutely. I mean,
Yeah.
New Zealand, yeah, come in, you're welcome. Australia, yeah, and you. But yeah, I think sort of like money talks, doesn't it? So that is the issue. You can't sort of like, if there's sort of escalating viruses taking place, which people are getting reinfected as well with these new viruses. So it's not sort of like something very nice to look forward to.
No, we're definitely not out the woods yet. Over to the riskier assets in the market. We saw crypto assets dive over the weekend as obviously people come to terms with the Coinbase IPO. Bitcoin dropped over 15% over the weekend. I saw it has bounced back pretty sharply and is up this morning, but just shows you how fragile these things can be and how quickly things can turn. Hopefully, there wasn't any over leveraged positions in and amongst that got stopped out. But yeah, more volatility expected, I would have thought. And then the big news this morning isn't really to do with markets, but it's to do with football and this breakaway European League, which is potentially starting in August. So it doesn't appear to be met by anyone. I don't think I've heard anyone that's got a positive view on it. So I don't understand how they're going to go ahead with it. But
I think that's the
it's just
problem,
power
though.
play.
It's you're talking to fans, and yeah, I don't think any fan is a fan of it. So, but then they're not consulted. So that's the issue. You're sort of like got it's a ridiculous thing. I mean, even Leicester aren't included in the top six, are they?
No.
You know, and but it doesn't make sense for me. It's just sort of again money talking. So yeah, just
Well,
not
Arsenal should
something
be
I'd.
nowhere near a Super League at the moment. Obviously, they've got a reasonable history, but if it's
Yeah,
based on, and you can't be relegated from this league either, and you'll get 350 million a season to start with.
so yeah, I
Um,
mean that's just yeah, I mean just the mind boggles. Who's is it the TV that's giving them this money? Where's the money coming from?
uh, yeah, it'd be TV, I think.
Yeah, I
Everyone
mean,
will want
just
a piece of it,
ridiculous.
won't they?
Yeah, and then you'll have sort of like they'll be playing the first teams in this sort of like new Euro Super League, and then their reserve team will be battling
They'll
out
have,
in the Premier Division.
they'll just have to boot them out, I think. The Premier League, well, I don't know. That's the thing. The Premier League's worth so much money as well that they'll have to keep them in, won't they?
Yeah,
We'll
I don't
see
know.
what comes of it.
Bragging rights
Anyway,
will be gone though, won't they? You sort of like, oh yeah, can't believe we beat Juventus at the weekend. Unlucky, son. And there'll be like no one in the room. You won't be talking to anyone. No one sort of like supports them sort of clubs over here. So where's all the banter gone? The banter will disappear.
who knows?
No
Who
one will
knows?
care.
Anyway, don't want to waste any time on that anyway because probably won't
Plenty
happen.
more
But
exciting things to talk about, mate.
well, I don't know if there is. But um, let's get stuck into some charts anyway. Is there anything you're seeing today that we should be taking note of?
Yeah, I suppose you'll come on. The dollar index obviously still sort of under pressure. I like what I'm seeing in crude oil, really, just on a shorter term chart. There's definitely potential for a either or situation here. So we've got potential head and shoulders formation on the 4-hour chart, looking pretty nice, pretty tasty. That could lead to a measured move to around about the 61.50 level. However, if we don't see that weakness, for me, it's more of a flag formation because you've got the pole here, and the measured move target would be somewhere in the region of the
So
highs,
it's kicking off a bit
67.60.
between Russia, isn't it? Well, I mean, that's obviously going to have an impact, you would have thought, on oil. Didn't I see they had 100,000 troops on the border with Ukraine or something? And
Yeah, I mean
there
that's
was more
been
news
for a few
about
days.
these spies that did the
Salisbury.
Salisbury thing. They were involved in something else in the Czech Republic in 2014 or something.
Yeah,
So
it's an explosion in the Czech Republic. I think 2 people were killed. Yeah, same couple of guys. Yeah, so there's a little bit of Cold War shenanigans going on, which isn't good in anyone's book. And yeah, that'll lend itself to sort of something like oil taking a bit of a lift from that. Also, we've got gold as well. Is that my gun to head
yeah,
trade from
you nailed that
Friday?
one. 3R.
Yeah, happy with that. And for me, it's it's a decent uplift, and more to come from gold. The $1,800 level will be a psychological level. It isn't far away. That'll be just above that. We've got 1808, which is 50% retracement of the down move from January, start of the year. And above that, even, we're getting up towards the 1875 level, which is the real key resistance for me. I think we'll be
So that
stalling around
blue
about
arrow
that.
you've got is the measure move of the double bottom. Is that right?
Yeah, so we got the double bottom formation here. I'll show you on the daily charts a bit clearer. Here's the double bottom formation. Here's the break. Haven't had the retest of the neckline, but it doesn't always happen as a retest. But yeah, so we take the move from the bottom to the neckline, the break there, and we project it higher, 1835. Again, we've got sort of like this pivotal level, around about 1850, and 1875 is the swing high. So some decent levels. A break of 1800, I don't think will be much. It'll just be like a knife through butter, to be honest. As we say, 50% retracement, comes in at 1808. We can draw it again on this. That comes in at 1817 there. So where did we get that 50% retracement from on this chart? No, let's redraw that. 1818 it is. So yeah, $1,800 psychological. Very sort of like brief stop there maybe, but I
So
think
the measured
pushing
moves,
higher.
does that line up with that chart you've got bottom right in terms of the bearish channel or corrective channel
Well,
flag?
this week it comes in at 1875, which is the real big level, and that'll be the top of this. I mean, for me, we're going to new highs quite quickly. Obviously, on this, we've got this flag formation, which is pointing to the move we've talked about, $2,500 in the gold, but I don't think that will happen. In the coming weeks, but moves happen so much quicker nowadays. Everything is so interconnected. A collapse in the dollar, and I'll be eating my words on that. That'll happen a lot quicker. But yeah, for me, there's sort of good potential for another at least $15 to the upside in gold in a short space of time this week, and more. So we've got 1800, and then 1817, then 1835. Other markets, indices, they're continuing to push higher. Obviously, FTSE, this is the weekly chart in FTSE. We've got the upward trending resistance line, the top of this wedge formation coming in at around 7,160. It's already broken last week's high, so potential to push quite aggressively higher. Again, on here, we've got this double, this sort of like intermove double bottom type formation playing out here. Again, that sort of like targets a decent move to the upside towards the highs of last year. Not impossible at all. DAX again, a bit more of a wedge in the DAX, and we've got resistance coming in at 15,675 there. Again, not really a lot to sort of compare it to, because we're at all-time highs. The Dow around about 34,000. What's the all-time high in there? 34,250, 150 points short of the all-time highs. Nasdaq on the all-time highs, 14,000, broken that 14,000 psychological level quite easily and holding above there. S&Ps again, all-time high posted at 4,190. Seems like such a long time ago I was talking about 4,000 as being a real psychological level, and it's just pushed through it really, really easily. There is a chart that I saw on LinkedIn at the weekend that I wanted to recreate, and it was to do with the China 50. And while you're talking about the FX, I'll try and recreate it.
Yeah,
it's
okay,
a really
mate.
decent chart where we see the stock market's pushing towards the high, China outperforming everything, which it did up until the start of March. And then it has a downturn while everything else continues higher for a short period of time. And then all the markets collapse into it. So yeah, I'll try and recreate that while you're covering the FX.
Okay, cool. Well, I'll get stuck into the FX then. And first up, dollar index, which is getting its ass kicked this morning. It's down by 0.42% at the moment, which is a pretty lumpy move for the dollar index. So this is a daily chart. We've got it within this sort of corrective channel at the moment. I did have some support levels, or a band of support in and around here, but we're crashing below that at the moment, and below this 50% fib level from these moves down here, these swing lows to these swing highs. So we need to see some buyers come back in here if this has got any chance of starting to move to the upside again. So not looking great at all at the minute for the dollar index, and the knock-on effect that's having elsewhere. First up, let's go to Aussie dollar. So this did break from a bullish channel back in March. Saw a bit of a correction lower, maybe a bit of a corrective wedge, but a powerful breakout to the upside was posted on the 14th, and that looks to be continuing higher today, engulfing all of Friday's price action in the process. I would maybe counter that and just say that the volumes have been pretty poor on this move higher. So, do you get sucked into it or not? I don't know. Based on the technical pattern alone, it looks quite nice for a continuation higher, or is it just forming a top pattern? We'll have to wait and see. The other one that looks quite good today is euro dollar. Obviously, the inverse of what we've just seen on the dollar index, trading in a tight corrective channel higher. And approaching, or fast approaching, this 61.8% fib level at 1.2037 from this swing high here on the 5th of February, from these swing lows on the 30th of March. Maybe we could also draw fib levels from the high here on the 6th of January to those lows, and we get a bit of a confluence, do we? Let's have a look. No, maybe not. Okay, so first up, so we're running into this 61.8% level, and above that we've got a couple of levels up here between 120.103 to 121.27. I don't know, is this a flag formation before a continuation higher? Based on the break of the trend channel, I'm not so sure. What could be happening, as I drew on last week, is maybe something like that. And we're getting the sort of last sort of move up again. Volume's not particularly great on this move to the upside, which is worthwhile noting. Even if we look at, let's just get that line on there. So these volumes down here in correspondence with this move up here, they're quite low compared to where they've been previously throughout all of this. So worthwhile bearing that in mind, I think. Cable, that's breaking out of the wedge to the upside as well today. Again, is this another sort of top formation taking shape, or is this something more bullish and we're going to see a continuation higher back up to those highs at 142.41? Certainly the technicals support it at the moment, but not necessarily being supported by the volumes. Elsewhere, the riskier assets like New Zealand dollar continuing to get a boost, again engulfing all of the price action that we saw on Friday so far today, and looks to be heading up to this resistance level here at 0.7269. So we look at the dollar pairs, dollar yen getting its ass kicked, going much lower today, 0.5%. This big trend line that we've drawn that goes back to 2015 looked as though it may be the start of a continuation higher, but we've seen a retest and it's failed to hold that so far. So looking like there's not much in that from a technical perspective at the moment. Dollar CAD, still waiting for a wedge to form here and a break to the upside. Not getting it at the moment. In fact, it looks closer towards a test of these previous lows at 123.65 rather than breaking up to the upside. So it looks like we're getting a continuation of the trends that we've been seeing over the last few months. So no signs of any reversals or big moves playing out on the FX markets for now. Just looks like more of the same. And again, it's all eyes on the dollar index. Not much out on the data front today to change any of that, although we do have some earnings today from United Airlines, Coca-Cola and IBM, which will provide some interest as we warm up for the week. It's going to be pretty heavy on the earnings front, so we'll have to wait and see what happens there and whether or not it has any impact on any of these markets. Steve, did that give you enough time to recreate this chart that you were hoping to show us?
Yeah, no, because unfortunately my chart doesn't go back to where I wanted to show you the dates. I could show you, and it hasn't really got. I haven't really got the right asset to sort of like play it against. So I'll get that ready tomorrow. If not, I can try and find the actual piece on LinkedIn so I can share it properly.
All right, let's have a look for that, and I'll talk through the guns ahead challenge. If you can't find it, then we'll chat tomorrow on that.
Yeah.
Okay, so the guns ahead trades from Friday. I went long of dollar yen. That's getting its, as I say, butt kicked this morning. So managed to have a 6-tick loss on that, 0.2R. So not a disaster. But thankfully, Mr. O'Hare saved today with a 3R win on gold. So that was very much needed. So congratulations, Steve, for that. Nice little bit of an uptick in the P&L as well. Let's hope we can build on that this week and see a renewed push to the upside. I need to update that because Steve's back in second. Ian, obviously, no longer part of the side, but we're keeping that in there for now until we change the format, which will be coming in the next couple of weeks or so, maybe.
Yep.
I got to try and find something now to trade. And did you have anything ready, Steve?
No. You crack on.
No, I haven't got anything ready. I'm going to just sit here and blag it now.
All right. Well, I'll take one then. I don't mind.
Have you got one ready?
Oh, yeah. It doesn't take me long, mate.
Okay, I can see that by your results. What we got? Go on, Steve.
Yes, I'm going to go with gold again. Did me proud on Friday, and yeah, I think we got potential for it. I mean, in an ideal world, I'll wait till it gets back down to 1770 to try and get long of it. It's trading at 1787 at the moment, so let's get long there, and we will have a reasonable stop. Should we have a reasonable stop?
Nah.
Let's see what this. There I go. Yeah, I will have a stop. I'll have a stop below the hourly candle. So my stop is at 1777. My target is 1817. I'm thinking it's going to, if we do sort of like start to push towards the upside, we're going to sort of take out the 1800 quite easily and find some resistance maybe at the 50% retracement level, which we've realized is at 1818 rather than the 1808 we thought initially. So that's what I'm going to go for.
Cool. All right, I found one. I'm going to go with sterling Swiss. This is an hourly chart, and as you can see, we may be forming a bit of a bottom here, but overall the trend is bearish, as you can see in the short term. This morning we've had a little bit of a move to the upside, trying to break above these resistance levels here at 127.50, but it's failed. So I'm going to jump in and sell that right now at 127.19. Stop loss above the highs that we've seen today, targeting a move down to the lower end here of this range at 126.27. So looking for 2.2 R on that one today. Stop loss just to confirm 127.60. Nice. So we'll see how that goes. Cool. So as I mentioned, nothing out on the data front today. There is obviously quite a bit going on with what's going on in Germany, but mainly focused on US earnings today by the looks of things. So good luck if you're trading. Steve, did you manage to find it, or should we come back to that tomorrow?
We'll come back to it. I'd rather sort of like give the full image on it.
Okay, great. All right, well, have a good day, everybody, and we'll see you tomorrow morning.
Cheers, everyone.
Bye-bye.